The inflation risk, how are you playing that in your portfolio?
Well, the inflation risk obviously manifests itself in a number of different areas. So from our point of view, we're very keen on those companies that have pricing power in this environment. And those areas, starting initially with certain raw commodities like tin producers, which are a little bit esoteric and not in the mainstream, but actually incredibly important because of their role in the electronics industry. So tin has doubled over the last 12 months, not something a lot of people have focused on. And tin producers, of which there aren't many, the biggest listed one is probably Timah in Indonesia. That's been an interesting area.
Right, but this whole China risk and the China allocation around the crackdown worries, around what's happening with regards to growth concerns in the property sector, uncertainty. How are you building your portfolio there?
Well, we're actually looking at property stocks in China at the moment because they're so badly beaten up. Now, I wouldn't be buying Evergrande. I think you have to be extremely brave to do that right now. If you really, I mean, they've got some interesting assets hidden away, but they've got also lots of liabilities which we're not clear about. So that's surprising to see that share price rising. I mean, on a $1.5 billion sale, that's a drop in the bucket of their liabilities. However, a lot of perfectly good, well-capitalized, well-run property companies have been absolutely creamed with the contagion from the Evergrande share price, and you've got decent businesses trading at 2 times earnings multiples, and that doesn't say their survival is very likely, and yet absolutely no reason to think that they won't go on and prosper for many years.
Wow, as we speak, there's been a spike in Evergrande on a low base, but now high about 11% plus. Could you share names of the stocks or the businesses that you're buying or have bought already, disclosed that is, in China, in the property sector?
Yeah, look, I think first of all, those with SOE property developers are obviously safer because you know there's a level of support and comfort. So not 123 in Hong Kong is owned by essentially the Guangdong provincial government. It's a decent company and it's got all sorts of favorable land acquisition opportunities. We like Shima. We think it's got an outstanding management team, very conservative. It's been very careful not to overpay for land, and Longfor also, and Powerlong, which has a particularly interesting portfolio of shopping malls, and their development model is, integrated communities built around shopping malls, and that's sustainable and it leads to higher gross margins.